Welcome to the Accessing U.S. Capital Markets from Europe panel. I'd like to, before we get into the discussion, ask for each of the panelists to introduce themselves and their company, their firm. Just about 1 minute each, and then we'll get into the discussion. So why don't we start with Nissim?
Yep. Thank you, Chris. So Nissim Darvish, I'm within OrbiMed Advisors. We are funds. We are one of the biggest funds in life science. We operate globally, 6 offices around the globe, managing about $14 billion US. The headquarters is in New York. We have an office in San Francisco, Shanghai, Mumbai, Tel Aviv, and Hong Kong. And through these offices, actually reach out and invest in life science company. In terms of sector, we do biotech, we do medtech, healthcare, IT. So we're really diversified, not only in terms of sector, but also in terms of stage. So we can go very early, and we can do pipe, etc.
Great.
Thank you.
Isabella?
Having me on the panel. So my name is Isabella Schidrich. I'm responsible for the listings business of Nasdaq in Europe. So over the decades, I have to admit, I must have worked with around 100 European companies, mainly biotech, technology, some industrial, some shipping companies, either they went for a primary listing on our US market or a dual listing with capital raise, without capital raise. Nasdaq, just in a nutshell, is a global multi-asset business. We own and operate 30 markets. We provide our trading technology to 120 exchanges. We have 4,000 companies listed on our Nasdaq US and Nordic markets, and we provide our services, investor relations, ESG, corporate governance services to 3,000 companies. So in a nutshell, Nasdaq cares for the listing, trading, and service provision of companies. Thank you.
Frédéric?
Well, I'm Frédéric Cren. I'm the CEO and co-founder of Inventiva. So Inventiva is a French biotech. We're listed since 2017 on Euronext and since 2 months and 2 days on Nasdaq. A deal that we made with Nick over the summer. As a company, we are focused on NASH with data that we published in June, very positive data in the development of a NASH therapy. We also have another program in MPS, recently finished phase 2A, and a collaboration with AbbVie with a program where we expect clinical proof of concept for the end of the year.
Nick?
Thanks very much. So Nick Moore, Managing Director at Stifel. I've been in healthcare for about 25 years, actually originally an immunologist, then a medical doctor, and third time lucky I became an investment banker. And I spend a huge amount of time taking companies from the UK and Europe to list on Nasdaq, and it's been an enormous privilege to work both with Frédéric and his team at Inventiva and Renee and her team at Calliditas on their Nasdaq offerings this year.
Renee?
Yes, I'm Renee Aguiar-Lucander. I'm the CEO of Calliditas Therapeutics. We have been listed on kind of OMX Nasdaq here in Sweden since 2018. We raised about $82 million. And we also recently then did a double listing on Nasdaq in the US. In June, we raised just under $100 million in that offering. Probably as far as I can tell and confirmed at least from Nasdaq, we're probably the first Swedish-based life science business ever to actually list and raise capital on Nasdaq Global. So that's pretty exciting. So we'll see if that will become a trend setting or not. But anyways, it was a very exciting opportunity for the company. We're focused on orphan disease. We have our lead compound in Nefecon in IgA nephropathy, which is a large orphan indication. It's a kidney disease, autoimmune disease, and we're in a pivotal phase 3 with data reading out in Q4 this year.
Shayne?
Yeah, thanks, Chris. Shayne Kennedy with Latham and Watkins. Latham's a global law firm with offices in 30 offices in about 14 countries. We have a particular expertise both in capital markets and life sciences. I'm in the corporate department, a corporate partner. I've been with the firm for about 22 years with a practice that focuses on capital markets and company representation, and in particular in IPOs, and have had the privilege to do a lot of those, and including several listings from companies over in Europe on the Nasdaq. So looking forward to participating.
Great, thanks. So I'm Chris Maggos. I'm with LifeSci Advisors. We're a global life science consulting firm. Investor relations has historically been the core business, but we're also offering services to support licensing, communications, investment banking. We have our own venture fund and KOL businesses. Why don't we start with the most basic question? And I think it'd be great if Renee and Frédéric could briefly address this. I think most of the people listening will already have their own ideas about this, but why could a European private or public company seek US investors? Europe's a big place.
That is true. Europe is a big place. But I also think that if we look at the kind of the depth of the capital market, I think it is still significantly different in the US than what it is in Europe. We still have more kind of country-defined pockets of capital rather kind of than the larger, more homogeneous market in the US. I also think that has allowed the US, because of that size, to actually be more specialized. Which is possible because of that kind of just number of companies and number of investors and size of the funds. And so I think you get a couple of things from the US. You get a comparable universe that is different from what you might find in each kind of geographic region in Europe, which is the way that most kind of research houses and banks are operate today still. Secondly, I think that you also get this kind of much more specialized funds who have large pockets of capital, and they can specialize even within kind of therapeutic areas. And so I think you get that kind of combination of being compared to companies that might obviously operate in your therapeutic area. You get those investors who are quite specialized, and I think you also from my perspective, I think there in addition to that, there has to be a strategic rationale for going to the US, in my view. I think just going there because you think that you're gonna, raise capital. I think you have to look at the listing in the US as a marathon, not a sprint. You're gonna have to spend a lot of time there, really build long-term relationship with investors. So from our perspective, we decided to do this really because the US was gonna really become our home market. We're gonna commercialize our own drug in the US. And so that's why we felt that, we really needed to establish these kind of longer term, deeper relationship with investors across the pond as well. And I think that was really for us the driving factor kind of strategically why we chose to go to the US.
Frédéric, you guys already had a pretty high percentage of US shareholders before your US listing. Why the listing? You were obviously successful at getting US investors.
Yeah, well, we actually wanted a US investor because we always had in the back of our mind that we wanted to go to Nasdaq. So I don't know which came first. For us, it was important to go in the US. As Renee said, there needs to be some strategy behind it. So for us, we operate in NASH, and NASH is certainly a US-driven market. So the key opinion leaders are there. The key market is there. Our key competitors are based in the US, so to be visible, to be present, we really needed to go Nasdaq. And one thing that the fact of being listed gives us, in addition to investor with deep pocket, is also a network of research analysts. It really makes a difference. The level of quality of coverage that you can get by being listed on Nasdaq, it's quite amazing.
Okay, I think maybe we'll move on to something that's on everybody's minds, and that's the current market conditions. I think COVID, regulatory uncertainty that's come up increasingly, especially with regard to FDA complete response letters. What is your point of view on this, Nick? You've been involved with a few U.S. listings from European companies this year. How is it affecting what's going on, but also what's your outlook?
Yeah, so look, I think as a banker, I'm obviously eternally optimistic on everything. But even market conditions and deals this year have massively outperformed my expectations. I think clearly we were going into uncharted waters at the start of the year with a global pandemic. We had kicked off the Calliditas process before lockdown came in. We kicked off and completed the Inventiva process through lockdown. And I think, we actually realized that we're very fortunate to be able to just keep carrying on and to do these deals remotely. I think the one big upside is efficiency. And in the prep phase, you can just get on file much more quickly because you can do more drafting sessions a week. The road show is now 4 virtual days instead of 10 physical days. But look, I think looking forward, clearly, a US presidential election always creates a little bit of market turbulence. How much that market turbulence lingers into 2021 probably depends a little bit on the outcome of the election. But you're seeing a number of companies continue to flip public in late August in the run up to Labor Day, and deals are on the road and getting done.
What's your view, Nissim, in looking at the markets right now?
So I would say, the following, I think the market is open and the biotech is actually flourishing at that point. I mean, we do see the line of company that file for IPO just increasing. I mean, it might be that this year will be one of the best year for biotech. So I think in that regard, it's amazing year for the biotech. It's found out that actually the biotech is resilient for what's going on the COVID, during the COVID pandemic, compared to other sector. So I think, we'll continue seeing more and more company going public. I think, you saw also, the stage of the company going public, going down, in terms of where maturation they are. So all in all, I'm pretty optimistic for this year. The question will be what come after that. I mean, for how long will the window keep open? And we need to make sure, that the right company will be listed. So that's my view.
Yeah, that's something that, and maybe Nick, it'd be interesting to hear. We've been following the post-deal performance, post-IPO, post-follow-on, and it's remained solidly in positive territory for all of the year, which I think is very encouraging with regard to future deals here. What are your thoughts on that, and what do you think could change that? Obviously, the U.S. election you mentioned, it's an excellent point, and it's always a reason for volatility. But are there other concerns?
Yeah, so look, I think, clearly if you've made money in your last 10 biotech IPOs, you're going to be very favorably disposed to investing in the 11th, 12th, and 13th, particularly if you're a generalist investor, although obviously it is a market driven by the healthcare specialists. I think, what you've seen this year is an even greater importance of a crossover round being in place. And I think, the discipline imposed by that process, having those investors under NDA in a VDR, doing extensive work, setting a valuation, and then, you know, an IPO stepping up more or less from there, it imposes some pretty rigorous price discipline in the market. So I don't see, you know, anything, you know, causing all of a sudden a slew of IPOs, you know, to happen and then trade off very significantly. I think, you know, the US market has got you know, a formula that prices these things pretty effectively.
Yeah, I would agree. And what about you, Renee and Frédéric? Are you seeing concerns from investors, or how is it when you're engaging with the investment community right now?
No part. As Nick said, I think we were the first, or one of the first IPO that went totally virtual. So it's certainly true that we had met with a huge amount of investor face to face. So I've been probably like Renee in the US for the last 3 years, like every month. So to do it virtually, it's actually worked very, very well. Now the question is, how long is that? Can it last? I think that at a certain moment that we'll need to go back to a more normal life. We'll never get back to what it was before, but we'll need to have some physical contact. But anyway, short term, in the next 6 months, 1 year, I don't think it will create any problem. Going forward, long term, I want to go back to New York, get a burger, a good beer, and meet with the investors.
I would second that. I would also really look forward to kind of meeting my investors face to face again. I think one of the points though is that, you know, we talk a lot about efficiency, and I think it is interesting because obviously a lot of investors in the US, they're at home and their days are crammed now, you know, with like all of these kind of, you know, back-to-back kind of calls and introductions. And I think that I worry a little bit again about this, you know, how much really high quality commitment do you get? And I think there has been so many new deals coming to market that actually as a portfolio company, you're actually competing against, you know, all of these new ideas coming to market. And I think it is a challenge actually for investors as well, because I think it's actually, you know, the bankers always say it's a great idea because it's so efficient, but they don't have to sit on the phone for like 10 hours back to back to do these things. And I think investors are a bit the same. And I think at some point in time, I do worry about, you know, the portfolio kind of management aspect of these investors, or how we can, you know, effectively compete and kind of really try and reconnect that, get that real connection with investors. And not just kind of be one of 20 phone calls that day. So I think there is a bit of a long-term concern.
Yeah, it's a really great point, Renee. And if I can just jump in there again, Chris, I mean, one of the themes we're seeing is that companies that had met crossover investors at least once before lockdown have managed to move forward and get a crossover round done in lockdown. But I think, you know, crossover investors, and maybe it's a point that Nissim can jump in on and opine on as well. If you've never met a company, you know, even under NDA, going through a data room, it's pretty tough getting comfortable to go to your investment committee and saying that you should lead or be a significant investor in a crossover round if you've never met management face to face even once.
Yeah, that's correct. I think, you know, I'm trying to figure out, you know, what we have done in the last 6 months in the COVID outbreak, you know, and I would say most of the deals that we have done are deals that we started working before the COVID started. So we probably had some meeting, you know, face to face, either with the management or the scientists behind the company. I cannot recall, there is one company that actually we are about to close, and this is done all virtually. So I would say majority are deals that we start working before the COVID. So yeah, I agree. I mean, it's tough to do a new deal when you didn't meet the management face to face and you got a feeling.
Yeah, I will say, just to add to that, I mean, we're working on a couple of private rounds, and I was hoping I'd be able to talk about one of them today. It should close soon. But it was done completely virtually. I mean, you know, the roadshow basically started in April, and it's a large round. They have a leading European venture fund that committed to co-lead, who knew them and who had, committed to co-lead at the beginning of the process. So that for me was a key aspect, because maybe Nissim, you can comment on that, but if you recognize the investors, you've worked with them before, it might make it a lot easier. Whereas if it was a company coming to you without a lead that and you can only meet them this way virtually, I don't know if you would consider that a barrier in this new world or not.
No, well, I'll tend to agree with you. It's usually the deal that we are doing right now is that people that we worked before and we know them and we trust them. So these are fun that, we have some kind of relationship with them. I don't recall that we have done either one deal that actually is totally new investor that we had never invested together with them. So I think that's also very important.
Yeah, so it could be in the current environment, for folks who are starting a fundraising process, finding a local, well-known investor who has international relationships could be, even more critical than usual, because that'll help to bridge to areas where we can't travel to.
One other comment.
Shayne, go ahead, please.
I was just going to say, you'll probably see the same effect, right? Not just on the private side, but on the public side. I think a lot of the IPOs and U.S. listings that we've seen now, those are companies like Frédéric and Renee, who had a chance to meet with investors over the course of the last year face to face, right? So, virtual roadshow wasn't radically different in the sense that they'd already had the one-on-one, but now, as this continues to push out, you may start to get companies that hadn't had that opportunity. It'll be interesting to see how that affects, sort of their marketing process when it's only been virtual. It sounds like, there may be some challenges, I think, working through that.
Yeah, Renee and Frédéric, you both mentioned how much work you did before the IPO, and Renee, you also had leading U.S. investors in your capital structure before your IPO. So, what are the sort of the must-haves from your point of view for a company that is looking to raise, not necessarily IPO, but to raise money in the U.S.? Is it strikingly different from what you would need to raise money in Europe?
I guess from my view is actually that it is very important, because I think you need to create some kind of familiarity or validity, and I think if you don't have the type of things that you'll have because you went to school together and you have those kind of other connections that you can then rely on, and references and people who kind of know you in different areas, if you haven't kind of been in that environment, I think it's even more important, to the comments that have already been made, that you therefore try and leverage some of those other situations where actually you have some kind of deferred validity, because someone has actually spent a lot of time, they've done diligence, they've chosen to work with you as a company, and I think they do get calls, and we know this obviously as we then go and see other investors. And just like Frédéric, I've been in the US pretty much every month since we went public in Sweden in 2018 to start this relationship, because as we know in the US, you don't just see an investor once and they make up their mind. It's a long process. It's a lot of due diligence. But I think having those kind of investors, I think, is critical, because again, whether it was virtual or not, I think the virtual world has made it even more important, is that there is someone that other investors can reach out to and get some comfort in terms of saying, you've done the work, what do you think about this and that? And I think that kind of validity is really, really important as you go through and try and build up more of a kind of a stronger US presence. At least that's kind of my experience and my view. I don't know, Frédéric, if you have a different...
No, it's exactly that. I think on the process is not different. The question we receive in Europe, in the US are the same. Might be a bit more scientifically driven in the US because there are more PhDs that are doing investment than in Europe, but otherwise the process is the same. But it's true that to be able to rely and to tell, well, I've got such and such investors, they've done a 12-month due deal, and you can pick up the phone and call them, and they can vet on us. It's extremely helpful, and of course we rely on these big names just to convince others to come in the book. That for sure. And also the banks, when you go and try to convince Nick and the others to work with us, and you tell them, yeah, the book is 50, 60, 70% full with big names. Well, they tend to listen to you more than if you tell them I've got 2 European guys that are ready to come. It's they are also looking at their bottom line, these guys.
I didn't require too much convincing, Frédéric. I love your story. I love Renee's story. You know that.
Yeah, I know. Just teasing you, of course. You know that.
So let's shift gears a little bit, and Isabella, I'd like to get your views on this, and maybe Shayne, you can chime in as well. So regarding dual listing, Europe and then US, or maybe it's advantages, disadvantages, and also for private companies, do you think they should skip Europe? I mean, if everybody who is listed, and not everybody, but a lot of the folks, companies listed in Europe are looking to list also in Nasdaq. So, and we're hearing more and more that private companies looking to list are wanting to go directly to Nasdaq in the US. So what are your views on that, and the key differences and advantages and disadvantages?
Yeah, thank you, Chris. I can only resonate with what was discussed earlier. The US markets are booming. We welcome many companies per day, whether it's a dual listing or a primary listing. So I wouldn't differentiate so much in between primary and dual listing. I think any route to market can be a successful one if it's done for the right reason. So, and Renee mentioned this early on, so a company really needs to be ready for a US listing and also committed. So a company needs to be for the US market in the long term. And then the route to market doesn't really matter, whether it's a dual listing or whether it's a primary listing. We are open for any business, really. We have 3 market segments where we provide access to the larger market cap segments, to the mid-sized and small cap companies. So whenever we discuss, the best way forward for a company to join our market, then we just have a range of questions for the company. It's whether the company will manage to raise the capital they set out to, whether the company will have an active aftermarket. Do they have access to the analysts, to the investors? Where is the valuation? Is it more on the, higher on the local market, or is it on the US market? Where is the future of the business? Is the future more in the US or in Europe, or maybe it's even in Asia? Has their business already some exposure to the US market? And where are the peers? And what is the sector of the company? And what is the valuation like? And if then answers to all these questions point to the US, then definitely the US market is the right market. And the way the company comes to the market, it doesn't really matter so much, whether it's a dual listing or a primary listing. We have many examples where companies have a very successful primary listing. I'm thinking only of recent IPOs we had here with CureVac, for example, and then BioNTech, 2 companies from Germany. And then we have obviously here the ideal candidates with Innate and Calliditas on the panel, which had extremely successful, secondary or dual listing in the US. And then if I look back maybe over the last 5 years, this dual listing of particular biotech companies was kicked off. And of these 30 or so companies coming from Europe, Israel, and if I define success now by, did they manage to raise the capital they wanted to raise? And did they continue to grow and manage to continue to raise capital? Then the answer is a clear yes. The majority of them was very, very successful. So again, if a company does it for the long term and has the commitment to make a US listing work, the way they join us doesn't really matter.
I'd probably say, just a couple things to think about when I'm talking to companies about that. And I think there's a lot of value that you can get in an initial listing outside the US, sort of access to local capital early. But my general sense, and they can probably weigh in on this, is the valuations that you get on the US market are likely to be a little better given the investor base that you have there. But then also, I think you run into some, they're not completely detrimental, but there are a few obstacles that you encounter if you're already listed in Europe and trying to do a U.S. listing, and those relate to things like, your ongoing disclosure obligations in Europe may cause you to have to start to talk about things for your U.S. listing sooner than you otherwise would have wanted to, right? You might have your hand forced a little bit there, and that can create some challenges that you wouldn't otherwise have, where you get to file confidentially and keep things, quiet. And sometimes that dual listing and your obligations on the other exchange can drive that. I think the other challenge comes in sometimes in terms of pricing, because if you have a price on a local market and you're going to price your IPO in the US, folks are going to look at that price when they're determining that price for you and your IPO. And so it almost sets a benchmark, which may or may not be where you want it to be, right? So sometimes it can be a little limiting. So, my perspective is if you had the chance to go directly to the US, you probably are able to get a little better valuations and control your process a little more. But those aren't, those are obstacles to consider. But certainly if there's an option, I would think you might be better suited for following that path. We'd be interested to hear others' thoughts on that, but that's what I would think.
Yeah, Renee and Frédéric, would you consider delisting now that you have the US listings to free yourself from the obligations that Shayne was mentioning?
No, I think delisting is quite a complex process, so I wouldn't go there. Just ended up a difficult process to list, so to delist from one another. But what Shayne raised, and it's really true, is a different evaluation. And one of the reasons also for Inventiva to go to the US is because we felt that the valuation we got in Europe was did not reflect the depth of our pipeline. So certainly by coming in the US, there is long term, because of course it doesn't happen overnight, but also to have a better valuation of our pipeline. So this is definitely true that it's an advantage that we potentially can get by being dual listed.
And I would also agree with, I don't think that we have any plans at this stage to delist. I think that there are different benefits from having European, and US investors. I think it's actually a very nice mix for the company to have that. It does put more work on management, clearly, to do this. But I do agree with the fact that obviously, if you are doing a dual listing, you will actually, to some extent, have the worst of both worlds, because you'll do all the work as if you're an IPO, because in the US, if you haven't been there before, technically you're an IPO. But on the other hand, they're not going to give you the benefit of the IPO pricing, because they're going to price you as a follow-on. And so you do end up in that kind of slightly, confused state when you do the dual listing. But again, I think that if you are going to go through and do this kind of dual listing rather than going direct, I think it has to be a long-term strategic reason for doing it. And I agree with Frédéric that, over time, you have to believe that, the value that you can create, is beneficial in terms of being on that market, and the extra cost and the extra time and the extra effort that it still takes. It isn't a walk in the park to actually not just do the process itself, because that's just really the beginning. It's all of the ongoing investor work and management and everything else. It is obviously an additional time investment and investment in a lot of ways that you have to continue with long term. So I do think obviously there are clear benefits in terms of going direct, but then again, if you are going to go direct, I think then you have to also have, have this ability to raise very large amounts of money potentially in Europe, which is not the easiest thing to do privately. And it also means that you then have to do all that work to get US investors on board as well before you go. So that in itself can be it's a pretty long journey, and probably not a journey that a lot of companies in Europe, is really able to do, in my view.
Yeah, I mean, you
And I wouldn't suggest that. I wouldn't necessarily think that someone that was dual listed, like either of your companies, would delist from your OUS exchange. I was thinking more if you were coming into it fresh and you had the option to either dual list or go direct to US. There's some benefits there where you go direct to US, but there certainly are, and I agree completely, benefits to having that initial listing in Europe, could be for all the right reasons that you say, right? You start to build a shareholder base, you get some recognition, you raise capital that you need. So there's certainly some benefits of both approaches to consider when you're going down that path.
I think what is interesting and maybe underappreciated in what you said, Renee, is that European listed companies that also list in the US are really at an unfair disadvantage in the sense that you need to do double the marketing. And the way I view it is, and please tell me your experience, but your day-to-day trading and price, at least initially, and I think this is true of like companies in the 50, 100 million to 300, 500 million category in terms of market cap. Your day-to-day trading is really local retail still. And so they're controlling your share price and your valuation, but your money's coming from US specialist investors. So you have to market to both sides if you're going to control your destiny, right? I don't know what you think of that, but if you don't market, your stock is a product that needs to be marketed, right? So if you're not marketing it to the folks who are buying and selling day in, day out, the price does, it's left to its own devices, which is usually floating down and the volume trickles up. So how have you, it's still relatively early days, but how are you seeing that? Is that something that you are experiencing?
I guess in our case, we don't have a huge retail base. So actually, when we did the IPO in Sweden as well, it was a fairly kind of strong institutional allocation. So we don't really have a very big influence in retail. But obviously, you're absolutely right in terms of the liquidity that's provided. That is generally provided by retail. I think that again, because this is not kind of super common still, I think obviously dual listings exist, but it's not necessarily super common. I think there's a period of time after the listing when there's a little bit of like, well, who's going to be in charge? Which market is going to be driving this? And everybody looks for the other market to kind of like, to decide. So I think there is probably a period of time until, the market finds, it finds this equilibrium and starts kind of, finding which market is going to kind of become maybe the driving factor. But I think what we've seen is a little bit, actually on both sides where this happens. But again, I think that, this is something where you're absolutely right. We do have to market, both obviously locally, regionally, and we have to market in the US. And I think, again, coming back to this whole view on COVID, to some extent, it is much more efficient at this point in time because I can sit in one place and I can have these conversations with people all over the place, and it's okay. Whilst otherwise, I really, would have to travel and see them in person. So I think to some extent that can be a benefit. But again, in the long term, I'm already starting to feel that, I need to kind of sit down and talk to these people in person. And I think that commitment in terms of if you are going to list somewhere else, I think you have to just be prepared for spending a lot more time on the kind of IR side, both in terms of having good advisors and spending time in management. I think that also means that you have to have an organization that is actually capable of taking that on long term. And I think that's something you really have to think about when you go and raise money in the US, that you do have that kind of strength in the bench in order to actually kind of manage this at the same time as you're managing the company.
Yeah, and I would add, it's not because you're listed on Nasdaq that you're not listed anymore on Euronext. So in our case, we should not forget about that, and we still have a very valuable investor in Europe, and we need to take care of them. So it's true that it's doubling the number of the work. So for us, we're still young on double listing, but we're already starting feeling that we really need. Anyway, Nasdaq it's only one step. We need an organization. We need to be sure that the organization follows. And it's true that in normal time, maybe I would have moved to the US and stayed there for 1 year as the time to make sure that everything goes in the right direction. So today this is not possible. So we need to find creative ways to solve this issue. But to your question, Chris, you're totally right. The price is still made by retail. So we need to make sure retail gets the message. We need to meet them. We need to be sure that we're visible. It's not because we have big names that made a big check in the US that life suddenly is nice and everything goes in the right direction. We still need to work day after day with retail and other investors in Europe. So that's just part of the job. It does not disappear.
So maybe we go back to more of the technical side, Shayne, from and you touched on it before, but the legal perspective on the differences and limitations when approaching U.S. investors versus EU investors. You know, maybe you could speak to that for a moment.
Sure. Look, I think anytime you're offering securities in the U.S., if you're from outside the U.S. or you're in the U.S., you have sort of the same requirements, right? Which are you either have to have an exemption from the U.S. securities laws to be able to sell those securities, or you have to do a registration statement, right? And if you're doing a public offering, doing a dual listing or doing your initial public offering in the U.S., you're going to follow a registration process. Once you start down that path of a registration process, there's a bunch of rules that apply in terms of what kind of communications you can engage in, both publicly and privately, who you can talk to, when you can talk to them. And so I don't want to go into a lot of that detail because I think it'll be discussed on a boot camp, but those create some interesting challenges for you when you're going to the U.S. that you might not be subject to in your everyday day-to-day in Europe. You need to be thinking about how those are going to impact the business over the course of that registration process. I'm sure Frédéric and Renee can comment on how they had to work through all of that going through their processes. Private placement, which is sort of outside of the registration where you're just going to the U.S. and raising money privately directly with investors, not in an IPO, it's going to follow sort of the same path where you have to talk to investors that are accredited at a certain level, and you can't use public communications and things like that. I don't think that's going to be a lot different than the process you go through in Europe. It's just going to be under the U.S. regime as well. So you have to sort of be keeping all those things in mind as you go through that. One of the benefits on the public side, when you are coming from outside the U.S., so you're technically fit under this definition, most likely of a foreign private issuer, is that once you get under those U.S. securities laws, you'll actually get some benefits that the U.S. companies don't get in terms of some of the reporting requirements, proxy rules, and ownership disclosures. So you do get a little bit of a benefit once you're in, but the process itself is pretty close to it.
Okay. Nissim, from your point of view, the advantages of being listed in the U.S., is it something that you look for when you're looking at looking at investing in companies, whether they are going to list or planning to list in the U.S.?
Absolutely, yes. I mean, the way that we look, since we are headquartered in New York and, most of our business are done in U.S., it's very important for us to make sure that the company can be listed on the Nasdaq. And the issue is, my colleagues here, Frédéric and Renee, already touched on it. I think the valuation-wise, I think company can get a better valuation on the Nasdaq than in the Euronext or other stock exchange. I think also liquidity is important It's not only, being listed, it's can we liquid some of our money through the Nasdaq or through selling some of shares. I think that's very important. And third is the banker coverage. The numbers of bankers in US then coverage and publish about your technology, about prospect of your company. It's also much better in I would say in the Nasdaq. So I think really, evaluating company whether they can go on the Nasdaq more than kind of going on Euronext or other stock exchange around the world. So for us, it's important. It's another plus when we're looking at the company. Does not mean that we won't look at Euronext listing, but again, we understand the limitation there. It's less sophisticated investor, less institutional investor, and less liquidity. So I think that's a key for us.
Nick, is that something you hear a lot? What Nissim just said, that really the leading healthcare investors are looking for companies that are going to list in the US?
Yeah, look, that is undoubtedly a truism. On a good day, I can find 12, 15, 16 healthcare specialist investors across Europe and Switzerland with deep pockets to participate in an offering. There are 300 or 400 in North America, and I think that's been a secular trend that's really unfolded over the last 2 decades, right? Starting with the first biotech and tech bubble deflating in 2001, just that pool of capital, that buy-side knowledge and specialism in the UK and Europe has decreased significantly.
Okay, I think we're getting close to the end here. Does anybody have any other thoughts on the subject that they wanted to bring up before we wrap?
No, just one sort of closing thought on my end. I guess I've been doing these dual listings and IPOs of European companies for 6 or 7 years now, and I worked with Shayne on Selectis back in 2015 and did some other deals before that, and in 13, 14, 15 we were kind of breaking new ground in a way. I think the level of knowledge and experience from the lawyers, the IR firms, the bankers now in terms of positioning these companies in the US to look as familiar as possible to US investors has got really to quite a high level of sophistication. And, I think for, whether it's a private company or a public company coming from Europe to do a NASDAQ offering, if you've got the right bankers, lawyers, IR firm behind you, you will have a very successful and reasonably straightforward process.
Let me push back a little bit on that, Nick. I mean, it's, yes, all of the advisors, absolutely, we love that. But what is a company that is really ready to go to the US and attract specialist money in an IPO look like? In terms of products, in terms of a board, in terms of, I don't know, what other factors do you think really matter? And I'd love for everybody to give their thoughts on that.
Look, I think I will sum that up with a one-word answer. It's about maturity, right? And what maturity looks like is protean. You could be, like Renee and the team at Calliditas with an incredibly exciting orphan indication in late phase 3 that really gets US investors excited. You could put up some phenomenal phase 2b data like Frédéric did in NASH, or you could be incredibly early. Look at Itios coming out of Belgium this year. Two assets in phase 1. Look at BioNTech, look at CureVac, these platform companies. I think that maturity and readiness can look in many different forms.
Yeah, I would agree with that. I mean, I think what I see people thinking about, and I might use a little different word than Nick, but some of it I think goes to predictability, right? And I think investors want to be able to look, it's biotech, right? So it's not 100%, but the later stage product that gives you some predictability, right? You've seen results. An earlier stage product, I think you start to consider other things like who is the management team, what's their history, what's their experience, what does the board look like, what market or what indication are they looking at, and what else is in that indication, and those types of things. So there's such a broad range. I mean, we see companies going out, phase 1 clinical now, and even earlier sometimes, all the way through phase 3. So, but there's got to be something in there that's going to help investors get some confidence that that drug is going to go from point A to point B, and also an understanding of what those 2 points are. And the better you're able to describe that and sell that, I think makes the difference in how you're processing.
Nissim, what are your thoughts on that? I think you're on mute. You're on mute.
Sorry about it. I think, it's all depend, maturity is not only the only thing that really matter. I think it's also, for us, it's very important, the science and the indication that the company going after. I mean, there are some other area that, that I would say, orphan indication is still kind of hot. Neurosciences, everything that have to do with neurodegenerative diseases is kind of, on the spot right now. So I think it's not only the maturity of the company, it's also the field and the science behind this company, which is very important and I think get us excited and gets the other investor also excited. And, and if you see what kind of company are going public nowadays, I would say, it's not only about the stage they are, it's about the prospect and, and the field they are playing at.
Yeah, I think there's a sort of a sliding scale between the attractiveness of the technology or the novelness and, a repurposed molecule that everybody's known for 20 years would have to be quite late, almost on the market, basically.
Yeah, I agree. I mean, it's the novelty. It's very important here to really attract the investors.
Sorry, Isabella, you were going to add something.
No, I just want to thank you, Chris. I just wanted to add, I know we are running out of time, but yes, investors tend to buy into the future opportunity a company creates, so in the growth equity story. And if a company prepares the market, it's really trying to be IPO ready and prepares for the IPO 2 years, maybe ahead of time, meeting, or 1 year and meeting with investors and build up the relationship, then it has a far better opportunity than to succeed at the time of the IPO and beyond. So this good housekeeping, what we obviously love to see with public companies, that they have the strong investor relationship program, and this plays already also into your court and bread and butter business, Chris, so that the management really embraces meeting with investors, what we heard just now from Frédéric and Renee, and not only doing this, which some companies do, which are dual listed, focusing more on the European listing rather than the US listing, and doing only quarterly reporting instead of meeting with investors on a monthly basis, which is obviously in a virtual environment so much more easier now. But once we are back to this face-to-face meeting, so really jumping on a plane and going there, then this helps really to build up the relationship and helps also with the liquidity in the program, which we discussed earlier on, because liquidity in the end follows liquidity.
Maybe just very briefly from Renee and Frédéric, what was it, do you think, that made your company attractive and ready for a US IPO?
Management, obviously.
Yeah.
Obviously.
Obviously. No, I mean, I think it's obviously a combination of what's already been said. I mean, obviously you have to have an attractive proposition that investors feel like they want to back. They understand what the outcome can be. And I think it's relative to what else is in that sector and in that area as well. They will look at you relative to what else is there. I think they do like some
But
consistency
Renee,
and
very specifically to Calliditas, I mean, what was it that made it possible for people to invest even before the IPO when you got your crossover investors? But what was it about your product, the stage of development, the indication that really drove that interest?
So I think for us, it really is that we are the global leader in an orphan disease where there is nothing approved. I think it's very simple. I think we pioneered the regulatory pathway. We're the only one that has positive data in that indication. We were starting in phase 3, so we're leading that. I think it's really is the fact that we were a leader in that kind of orphan category and would have a high probability of coming to market first where there's nothing approved.
Yeah. I would agree. Frédéric?
Yeah.
Well, for us, of course, where our data in NASH that clearly help us. I think also there were some, how could I say that, we did and achieved what we had said. So for the past 2 or 3 years, we have told, the people we met that we believed in our product, that we had come up with a design, a trial that was well conducted, that we could deliver. And we delivered as we promised. So I think that's something that investor appreciated. And then lastly, it's sad to say, we also came in with a valuation that was not, was really low compared to some of our peers. And so certainly investors saw de-risked the compound with a valuation that was really attractive compared to other US biotech. And so we go back to what Shayne was saying before, is that we are a bit punished when we are in Europe because of this valuation, but sometimes it's an advantage because it motivates the investor to come in with bigger tickets.
Great. Well, with that, I think we've probably gone a little bit over time. Thank you all so much for participating, and thanks to the audience for listening in. And we look forward to seeing you in person soon.
Thank you, Chris.
Thanks, Chris.
Thank you for all your support. It was amazing.
Thank you.
Thank you.
Goodbye.